Welcome, Bahay. It's been a while since we've last talked over Zoom. I'm very pleased to have you back at GOLDINVEST. Actually, we at GOLDINVEST have been covering on and off Parkway since something like almost 2 years when you started to take over the company. You've come a very long way. You even renamed and reorganized the company to be now a fully fledged industrial water treatment company, very well positioned with some recent acquisitions. So there's lots of things to talk about. And I just hand over the baton to you and say, just explain where you want to position the company from here.
Yeah, thanks, Sven. Good to be with you, and thanks for following the Parkway story. It has been quite an exciting journey. You are right. I mean, we are at quite an important juncture in terms of water treatment and sort of sustainability more broadly. And at Parkway, we're really trying to position the company as a leading provider of some of these industrial water treatment solutions. So I think there's a lot of awareness around carbon zero and the need to reduce emissions, of course. At the same time, we're seeing similar pressures on the global water supply, stakeholders placing a greater pressure on large industrial users of water to improve their sustainability. And Parkway, we're really bringing new technologies to market to help make some of those things a bit more sustainable with quite specialized solutions.
Well, the new kind of buzzword that appealed to me looking at your recent updated presentation was that you go from net zero to net positive water. That's a very compelling proposition. Just what does that exactly mean?
Yeah, no, for sure, Sven, you're right. I mean, we're all obviously increasingly aware of net zero in terms of carbon emissions. In terms of net positive water, you're right, a number of major companies. I think most recently since that presentation earlier this month, Google has made similar commitments to net positive water. But what it essentially means is that the companies commit to recycle or recover more water than their operations use. So will have a positive impact on the water balance. And I think this is quite important because we saw this with net zero. Initially, it's the less carbon intensive users of electricity, data centers like Google. It's easier for them to make the commitments, but invariably the industrial users come around. Mining companies, industrial companies have to come around and adhere to those standards, even if they may be laggards, weren't necessarily leading the transition. Yes. I think in terms of net positive water, we're in the process of seeing something very similar. The large companies with corporate social responsibility mandates are making those commitments. And I think in time, those larger, more intensive users of water will also invariably need to make those commitments. And at Parkway, we're really trying to position ourselves where it can be quite difficult to reduce that intensity of water use, and trying to really position ourselves to give those customers a technology-based solution. Yeah.
The way I look at Parkway is as follows. You evolved the company really from previously being even an exploration company now to a technology company based on a next generation technology, really. And so that is the big prize, of course, if ever the majors would come to you and do a project together with you and Worley, for example. But that said, what I see also is that you're not just waiting for this to happen, but you are positioning the company to be a real company with cash flows with these most recent acquisitions. I think that is something you need to elaborate a little bit. Why these acquisitions, and are you still obviously in line with this next generation blue sky perspective for the company, really?
Yeah, no, look, another great sort of set of questions there, Sven. So fundamentally, the technology portfolio is within our DNA. It's 100% what we believe in. That's what I think gives us the transformative potential. And these aren't just technologies that we're sitting around waiting for companies. I mean, we're actively piloting, preparing studies, engaging major companies with those technologies. So that's an active and ongoing program, and we do that with our partners, of course, from the R&D perspective with Victoria University, and from a study perspective with our strategic partners, including Worley. At the same time, though, the development of those projects is in many ways subject to third-party approvals, third-party timelines, depending on what those priorities are for those stakeholders or prospective clients. So what we've got to do in the meantime, in the last year or so, we've assembled quite an impressive team of technicians, engineers, commercial people, and a real capability. And rather than sit around waiting for those projects to advance to a material stage, we're using those resources we already have internally to deliver some complementary conventional water treatment technologies. Yeah. And you're right, of course, there is an imperative to build a revenue base and generate some cash flow from those. But this isn't just an unrelated, we're building a small cash flow stream. The part of the rationale for developing that conventional water treatment capacity, it puts us in front of customers, it helps them solve conventional water treatment technologies, and that's a much more credible and a much more lower risk strategy in time to introduce newer technologies to the client. So we may have assisted you with a low-hanging fruit. We've now reached a limit with what can be achieved with conventional technology. If that water treatment challenge is painful enough, they can go up the risk curve and explore, a more disruptive, higher risk, higher reward technology. So that's really trying to build a portfolio of capabilities here, Sven. Yeah.
I get it. You're trying to be a one-stop solution type company. You are helping with let's say everyday problems, and then while being at your customer side, you get to talk about more complex solutions eventually. I think the one thing that is interesting to note is, just as a sign of how far this company has changed, how many people are you now employing, and what are those people actually doing? I think that comes as a little bit as a surprise, because as an exploration company, you have a couple of geos running around, but this is not the type of staff you have anymore, right?
Yeah, no, that's right, Sven. So, I mean, I guess going back to your earlier question about sort of one-stop shop, I mean, it's a little bit of a double-edged sword that I'm sort of reluctant to embrace. So, I mean, yes, we are providing products and services to different companies, but really our focus is on those customers that we can grow with and ultimately deliver technology-based solutions. Not always the case, but we're not running around chasing low value, low margin, small companies that are unlikely to become material to us. So we do have a diverse range of projects, but a lot of our effort is on those more strategic, industrial, energy, mining type companies. Yep. In terms of the journey over the last 18 months, you're right, Sven, there have been a number of acquisitions earlier this year, and with those we've grown the team. So 18 months or so, essentially, or nearly 2 years ago, when I became managing director, I was actually the only employee of the company, Sven. So we had a $2 million market cap, single employee, and we're roughly 30 at the moment. So we have engineering staff, technical staff, corporate team spread across Melbourne, Darwin and Perth. So for those unfamiliar, that's the southeast corner of Australia, Melbourne, the southwest corner, Perth, and the top in Darwin. So we've got, I'm not sure if I'd go as far as a national footprint, but we have at the extremities of the country 3 operating bases, and we have technicians at those locations. We have corporate support, we have engineering teams, and with those acquisitions, existing customers as well. So most recently, with that Moorpump acquisition, that company has been operating for 30 years. It serves a number of global mining companies, delivers them fluid transfer, pumping, dewatering, floating pontoons. So there's major companies that rely on Moorpump, and using that customer base, we're actually using the rest of our team to deliver added value solutions. So whether it's chemical dosing or filtration, conventional water treatment, and in time, we would hope to introduce some of our technology-based solutions to some of those customers as well.
Wow, that's quite impressive, from 1 to 30 in 18 months. Where do you see the company in the next 18 months? That bodes the question, doesn't it?
Look, it does, and I have to be comfortable. I have to be careful as a director of a public company, the sort of statements I make. But in terms of just on a pro forma basis, if you were to look at some of the companies we've acquired and some of the sort of the historical revenues they've generated, sort of on a pro forma sort of basis, that's $3.5 million a year of revenue, and that's not a financial forecast for the record. Yes. But obviously, we would hope in time we could grow those revenues to multiples of that, and reach a point where, for instance, we're generating $10 million a year in revenue, and that's a stepping stone to bigger and better things. But obviously, these things are always lumpy. It takes a while to get new businesses off the ground. But importantly, we're delivering projects for customers in industrial water treatment today. We can grow that existing business fairly significantly, and that's a platform from which we can also launch our technology-based business as well. So lots of opportunities, and hopefully we'll have a little bit more to say about what those opportunities look like soon.
The pro forma is, in a way, very rather conservative projection for the existing business. Doesn't really reflect any additional, let's say, blue sky project, for example, that would come on top if it was to come.
Yeah, I mean, the sort of infrastructure we're building as a public company, with a team of 30 and operating bases, I mean, clearly the infrastructure is not geared up for a business that's going to turn over $10 million a year. That would just be that's a number that we kick around internally, because it reached that sort of revenue with some margins, is material to the group in terms of your funding. Conceivably, it could be cash flow break even. Again, I don't want to make any forecast, but that would be a important interim milestone for the company to be able to demonstrate within a short period of time. We've gone from zero revenue, no capabilities, to some modest revenues, reasonable operating experience. All the while, the more bigger picture projects and technology portfolio advances. So, particularly as we provide a little bit more information about what those technology projects look like, and just to rehash, Sven, since our last conversation, it's been it must be nearly a year. Yes. Some of those technology projects are potentially worth $2, $3, $5, $10 million a year to Parkway. They're large, long-term material contracts. With that, though, even if we were to come out and announce, and certainly working towards this, that we've been engaged by a major energy company or a major mining company, that's absolutely what we're focused on. There's still a gestation period to complete those studies, agree to financial terms, deliver those projects. So even though that would be very material for us longer term, in the meantime, we still need to be building an operating business. And what we're doing now is investing in that capability, build that infrastructure, build that operating track record, even to the point where we're implementing software systems. We're in the process of ISO accreditation, so we can demonstrate to the best companies with the best available technology, we can help you with your water treatment. And there's a lot of investment and hard work that's required now, maybe ahead of the curve, but that's what we're investing in.
No, I totally get it. You're just not leaning back to wait for this big bang to happen. You are rooting the company in real business, in cash flow business, enhancing your capabilities, also proving your capabilities to the clients and to the future clients. I get this. I think from an investor's point of view, which is really key to take a key takeaway, is that you by no means you have given up on the blue sky growth potential. The business that you're building is really a means to an end. And you're still very much focused on these projects, but as you say, projects have long lead times, and the timing is not necessarily in your hands as being a small company. What I've noticed you saw that obviously as well, probably looking at the sector. The water treatment is becoming increasingly, let's say, a focus of also listed companies. Fidelity just has launched a specific fund. ESG is a theme. There were 2 IPOs this summer in Europe. So I think the sector as such is attracting a lot of eyeballs, and rightfully so, because it's a massive theme, and water is a critical resource. Any comments on the market side of things in a general way from you?
Yeah, for sure, Sven. I mean, I think what happens in many of these emerging sectors, you see this in sort of a lot of different industries where the tailwinds are so strong and the technology, the incumbents, the market is there for the taking. There isn't anyone established who's the clear market winner. Yes. You have adjacent market participants, big, well-resourced companies that need to get into that sector. And they realise that it's a 3, 5, 10 year, even with big budgets, to be able to build that operating history. And it often reaches a point where, particularly those companies that have been caught flat-footed, the only way to get into this space is to make strategic acquisitions. So just this week, I think actually partnered with Grundfos, obviously the world's largest sort of pump company. They came out that they'd made a major water treatment company acquisition. There's a whole bunch of players that are consolidating to really position themselves for this, emerging opportunity. And I think sort of the sorts of discussions we're having with a whole range of sort of companies, it's very, very clear that those companies you mentioned that listed recently in Europe, for example, I'd argue in very similar situation, on a pro forma basis, similar sort of revenue, similar sort of technology position, capitalised at, somewhere between 10, 20, 50 times our current market capitalisation, and that's not to say that, one set of investors is better informed than the other. I'd just argue that I think perhaps European investors are a little bit more aware of the ESG challenges, but also the opportunities, that can be created by getting into these things early. And I guess from my job, something that I'd be looking to do sort of, over the next 3 months or so is certainly providing a little bit more visibility of what does Parkway look like in terms of technology? What does it look like in terms of its positioning in the market? And give investors a clearer choice for, where we can take Parkway over, the short, medium term. And I think looking at the opportunities in front of us, I think strategic, like technologies, I think are strategically going to be a key way to play this thematic. It provides a capital light exposure to being disruptive. And I guess from our perspective, if we can solve a significant challenge for one mining company, I mean, that's great for us. It's material. The numbers I mentioned would be worthwhile for a small company our size, but a larger company beside us will be looking at that and saying, well, hang on a second, isn't there 30 or 50 or 100 of these things? So all of a sudden we invariably become more valuable to another company, and we're not for a second contemplating selling out, but we are putting ourselves in a position where, the inherent value of the company can be recognised. And I think that's how these companies in Europe are being valued. They're being valued on, what would an acquirer be conceivably prepared to pay, or what's the option value?
Yeah. No, I think it's exciting times. There's a whole, let's say, cluster of companies evolving with different valuations, maybe that will need to be sorted out over time. But I think it's fair to say that the unique, what makes Parkway in a way unique is that you are focused on resource companies, on the resource sector, and there's a lot of cleanup to be done there for sure. And as you said, those companies have to catch up with ESG and stuff. So I think the pressure is also on them to maybe be active and do something. And if you provide solutions that work in one locations, that should definitely set a signal for others to even get more interested. Anyways, I would say we covered a lot for now, and we should try and catch up sooner than last time. and we will certainly continue to watch and cover the company here on GOLDINVEST. Pleasure as always, Bahay, and thank you for taking your time today. And I wish you success for your undertakings.
Thanks for your support, Sven. All the best.
Thank you. Bye-bye.
Thanks, Sven.